In this video, I would like to give you an overview of the retroactive funding landscape as we see it at AI Safety Impact Markets. I'm Don Drescher, and the structure of my talk is going to be such that I'll first start with a little disclaimer, then outline the purpose and vision of retroactive funding, give you an overview of the landscape, go in depth on a few specific projects, and then end with a call to action for you. In this talk, I'll be talking about a lot of projects in the retroactive funding space. I am co-founder of AI Safety Impact Markets, so this is the project that I know really well. I have only an outside view of all the other projects, so please don't expect me to have any particular insight into those other projects. Thank you. So the basic idea behind retroactive funding is that there is some sort of buyer or retrofunder that provides funding as an incentive. This could be a government, could be some sort of protocol in the blockchain space, it could be a foundation, it could be a startup in a growth sector that is doing R&D. It could be a company that has a corporate social responsibility budget. It could be impact investors, donors, all sorts of altruistic actors. And the idea is always to create an incentive to commit to paying out some sort of reward to create an incentive for project developers and investors. Now, with this incentive in place, these project developers can go to investors and ask for risk capital in the form of an investment like equity or debt in order to realize their project. Sometimes those project developers will just be their own investors. They have a bit of capital that they can dedicate to more risky investments, and they'll be basically their own investors. That is just another special case. And then if the project are successful, the buyers can reward both of these parties, and these financial flows are then indicated in this diagram here, but of course they only happen conditionally on this project actually producing something that the buyer values. This solves a few different problems, and depending on the temperament of the buyers, some of these might be relevant in a particular case, or they might not be relevant. One that is particularly important for us at AI Safety Impact Markets is what has been called the long tail problem. The long tail problem describes the problem that there are often a lot of small startup projects, maybe independent researchers in our case, or just really small think tanks, maybe just think tanks that are merely an idea at a particular point in time. And these projects are so small and so many that the large funders can't review all of them. So they could just give those projects money at random, but on average these projects are not valuable enough that it would be cost effective for the buyers to just distribute money at random among them, and that would also attract a lot of fraud and other bad actors to the space. So they have to do a bunch of vetting, but the time that they, from their perspective, where they don't know a whole lot about each of these projects, the time that they would have to invest in order to do their vetting is in no good proportion to the value that these projects produce, and to the sizes of the grants that they could give out. So they would have to invest a lot of time vetting these projects to find even one that they could make a grant to, and then this grant would have to be relatively small. They're much better off in that case ignoring this whole space, even though there are gems in it, ignoring this whole long tail and just making a few big grants to organizations that already have a proven track record, usually pretty established, bigger organizations. Now, how do we serve this long tail? Well, in this case, we can set an incentive in order to attract investors to the space. And these investors will have like specific private information about the individual few projects that they want to support. These investors might be like in particular, might have like particular special knowledge, might be like active in particular spaces where they know the people really well. So they will have like very good local information about a few of these projects, and taken together, all of these investors will have specific knowledge about a lot of these projects in this long tail. They can provide this knowledge to the market and can even make a profit of this. And in some cases, these buyers will be ready to pay a premium, but compared to the counterfactual, where they cannot fund these projects at all, they are happy to like pay a bit of extra money so that the investors can make a profit of this deal, and in return are able to capitalize on these extremely high value opportunities in the long tail that would otherwise be very hard for them to recognize. No access to talent. That is a pretty specific case where a startup in a growth sector wants to get some R&D done, for which they would hypothetically have to attract top talent in some space, like maybe some university professors or some people like that. Being a startup, they don't have the funding to do that. They don't have the big name that would be like interesting for these people to work for. And so this is basically not an option for them. But the startup can become its own outcome payer in a way. It can become its own impact buyer. Some version of the startup in the future has a lot of money. The startup has a lot of money in the futures in which it is actually successful in realizing its project, and then they can make a binding commitment to, in the event where they achieve this success, to then reward the people who have contributed to that success. And that can also be like formalized and standardized in our setup. That can also be like formalized and standardized in our setup, and enable these startups to draw on this top talent to produce open access research that helps them get off the ground and then hopefully realize the success. That has like a host of advantages that I won't go into too much in this talk. But the key point is that this is particularly interesting for startups in growth sectors where they can just produce open access research because competition is not such a big factor for them. Competitors are just like other people that help them with the marketing of this whole sector. Now finally, risk aversion. This is currently the major use for impact markets. There are already a lot of like government actors and large foundations that are using retroactive funding or like outcome-based funding in order to realize positive change in the world. And they're often doing this because they are like risk averse. They want to realize change with low variance and want to rather outsource this risk, this carrying of the risk to for-profit investors. And that's why they are using retroactive funding for this. Again, this they might be happy to pay a premium, but compared to the counterfactual where they would have to like fund all of these projects that don't pan out at all, they are probably even saving money in the end. It just depends on like which counterfactual you compare the retroactive funding outcome to. Now the whole ecosystem that I imagine around these mechanisms is a bit more complex. And this is basically the ideal solution that I envision at the moment. That is basically copying what works for the carbon credit space and following this analogy that we basically want to establish something like carbon credits, but for any kind of positive social impact. So some of these key things that I want to see are that we have clear standards, first of all. In order to get buyers into the space and in order to get investors into the space, you need to have clear standards where everyone can agree what it is that they're trading in the first place and what it is that these buyers are buying or what these investors are investing into. Without a shared understanding of that, it's going to be very hard to convince investors and buyers to purchase these constructs. Then what I think we'll also need is a public registry and a public ledger in order to prevent fraud. And I'm mostly thinking of double issue fraud here, like some sort of type of fraud where someone is trying to sell some positive impact that they have generated, or maybe even that some other party has generated, to sell more than 100% of that. So they might, for example, issue, like claim to have realized this impact, and so issue an impact claim on one marketplace and then issue that impact claim again on another marketplace. And if these marketplaces are sufficiently disconnected, no one might notice that these impact claims overlap or are identical. And then they can sell more than 100% of what they own. They might also sell shares in these impact claims privately to different buyers, and so sell more than 100% of them because these buyers don't know of each other that in aggregate they own, they have bought more than 100% of this impact claim. These are things that can be prevented by having all of these transactions and all of these claims in public, where they can be vetted, and that is something that the patent system currently struggles with, but we can learn from the problems of the patent system and hopefully prevent a lot of these problems from the get-go in impact markets. Then I think that evaluation should, and with all of the standardization and registries and so on, we are in the top right corner of this diagram, where it's the standardization, and that is something that I would like to see done by these standard-setting firms. Then when it comes to evaluation, and this is now the top left corner, when it comes to evaluation, I would like to see evaluation of the total impact and not only of particular cherry-picked outcomes, because it can happen that some positive outcomes come at the expense of other positive outcomes. And if a charity realizes some positive outcome, but thereby harms some other positive outcome, then that outcome should trade at a lower valuation than an outcome that has been achieved without such negative externalities. And there can be disagreement over what sort of outcomes are positive in the first place. So if outcomes are uncontroversially positive, they should also be valued higher than outcomes that are controversial, where it is controversial whether they're positive or not. Then prediction markets can also help debias these evaluations in particular cases. If you have questions about that, you can ask them in the Q&A. I think prediction markets should also play like an important role in these markets, and basically the prediction market should start as early as possible, as early as this project starts fundraising. Then I think that we should aim for having as few markets as possible for deeper liquidity, but also for the aforementioned reasons of like incentivizing moral trade. So basically when you evaluate things by the total impact that they generate, evaluate projects by the total impact, then you're incentivizing the project developers to morally trade with other project developers that might have different moral opinions. So this incentivization is a very valuable aspect of having fewer markets. But then fewer markets also provide deeper liquidity, so a win-win. Then I think we need public deflationary auctions for investors, Public, of course, for the aforementioned reason, but also deflationary, so that investors try to come in as early as possible. Currently, charities struggle with this problem that donors wait out other donors. Donors try to keep their money in the hope that other people will already fund some charity, and then only donate if it's absolutely necessary, because they can keep their money for some niche project that no one else would fund otherwise. That is basically a defection in an assurance game. So we want to establish an auction mechanism that incentivizes the investors to invest as quickly as possible into charitable projects, so that they can be funded more quickly. The uncertainty for the charities of whether they will or will not reach certain funding goals is as little as possible for as short of a duration as possible. Basically charitable efforts can also just be funded more quickly and then get started more quickly as well. So lots of advantages to having a deflationary auction mechanism, like for example a bonding curve auction, for this sort of purpose. Then assurance and coordination among buyers, I think, is very important. Basically for the same reason, except buyers are not profit oriented, so you can't just use an auction mechanism for this. But there are, of course, assurance contracts. You can establish assurance contracts, dominant assurance contracts for this. You can use the S process. There are nice videos by Andrew Critch on YouTube on how the S process solves this problem. It uses marginal utility functions for this, and lots of people will probably not have a clear intuition what their intuitive marginal utility function is. So I imagined that it might be possible to create an 80-20 version of the S process that is suitable for using it with a wide audience of lay donors. But there are also other coordination mechanisms that are already tested on wide populations, like for example polis. Polis could serve to order outcomes by their uncontroversiality, and that is something that evaluators could use. Then, of course, my ecosystem would also include exchanges and retailers to do the sales, and for all of these auctions to take place on. And so this is basically the vision for what I would like this ecosystem to look like. And of course, that vision is evolving. People might have different opinions on what exactly this should look like and which of these are actually important. And I also imagine that over time, I will update on a lot of these. But at the moment, I think that these are the most important aspects of this ecosystem. The long-term vision is then to integrate charities into the for-profit sector. Currently, there is an unnecessary separation between them. And if charities can incorporate instead, not as non-profits, but as public benefit corporations, then they could harness this ecosystem and make use of it and generate a lot more positive outcomes a lot more quickly, I think. Building blocks for that are these what we usually call impact certificates. You can think of them basically as patents on impact. The problem with ideas is that they are just public goods, so by default an idea would not be monetizable for a person, so a person with an idea would not be able to attract seed funding to get this idea off the ground, because no profit-oriented investor would want to invest into a public good like that. But then if you have a government that assures you that if you register this thing as a patent and you're the first person to register it as a patent and it's actually yours, then they will ensure that no one else commercializes this idea unless they license it from you. And we want to establish the same principle where you have a public good or maybe a network good or something of the sort, and you make it artificially excludable through this quasi-patent on impact, so that so that investors can be incentivized to come in and provide the seed funding for you. So yeah, it's basically about creating like artificial excludability for impact. And then I imagine that most of the trades and most of the like incentive setting from buyers should probably not happen on the level of the individual impact certificates, because they should probably be traded more like products, where like a charity puts out a lot of these small impact certificates and just sort of probably sells them in whole. And like sort of on the level of like, if you're running a think tank, then like one impact certificate per like blog post or per paper or something that you put out. So it's like really clear what the authorship is, who's contributed to it, who owns like which fraction of it, and so on. Keep these as small as possible, as like easy to intuitively grasp as possible, so that there are also like cultural norms that enshrine who the owners are. And then have like all the actual sort of incentive setting and trades and so on happen on the level of the impact credit. So this is this thing that we are mostly focused on at the moment, that we want to establish. Our long-term vision is to actually have a market like the carbon credit market, but for impact credits for any kind of positive impact, where buyers like governments and so on can just set their limit orders, and then investors that have invested into some sort of successful altruistic project can gain their impact credits from the validators or auditors or evaluators, and sell them into the buy orders that these governments or foundations and so on have on these markets. And I think that's sort of the vision that will probably streamline this ecosystem as much as possible, mostly going off of the example of carbon credits. So if this were an actual talk, I would pause here for a moment and make sure that everyone has understood everything. Since this is a pre-recorded video, please ask in the comments if you have any questions, and I will move on now. Now, what follows is my overview over the landscape. And first of all, I want to make a distinction clear. There is the distinction between outputs, outcomes, and impact. And here I have this one example of a contractor. For example, if you go to a restaurant, then you pay the restaurant for the food that they make for you. But if you go into the restaurant already relatively full, and you're super full afterwards, then you don't pay them more than if you go into the restaurant completely famished and you're not super full afterwards. So it's not about the outcome for you that you pay them for, but the output. Then what is already pretty well established is outcome-based funding. So there are these really well-established social impact bonds and development impact bonds that governments and large foundations are using to incentivize altruistic things, or improvements in living standards and so on in various countries, and also for nationally for various public goods projects. These are usually focused on outcomes, so very specific metrics and particular ones that project developers need to reach. OutcomesX, as the name says, is also focused on outcomes. They have the impact genome in the background, which is a project that has standardized a lot of outcomes, to the tune of 100 plus or so, and that is also a very sophisticated system that they're using that is completely focused on outcomes. ICSO World, I have not managed to get in touch with them, but they also seem to have a pretty mature system that I think is outcomes based. If you follow this link or this QR code, there is a podcast interview that is the latest one that I could find with the founders of ICSO. And that is probably a really good source of information on ICSO, since I won't cover them much more in this presentation. Then there are, of course, carbon credits. Carbon credits are like sort of our role model for how we think this market should work, except that we want to focus it on impacts. This doesn't make a big difference for carbon credits because by definition they are about one very specific impact that is identical to an outcome. Still, it would be really nice if instead they had gone for some sort of credit that takes the full impact into account, but that is probably left up to us. There are advanced market commitments, another example where incentives are created for outcomes. Then when it comes to prizes, and in particular also, when it comes to prizes, prizes are used for all sorts of different things. So there's no clear line to draw there whether prizes are used for outputs, outcomes, or impacts. There have probably been plenty of prizes for all of these. There is the retroactive public goods funding project of the Optimism Layer 2 blockchain on Ethereum. There are retrofunding things, efforts that have helped their ecosystem. And this is a very nice example of something that, is a foundation de facto, but could just as well be a for-profit using this mechanism in a growth sector. A very nice example for this this use of impact markets, and I'm not sufficiently briefed on the details of how they conduct their evaluations, and probably I wouldn't understand them if I were briefed on them, because I don't have that in-depth knowledge on their tech stack, unfortunately. So that's why I'm leaving it a bit open. Whether they are focused on outputs, outcomes, or impacts, I would imagine that they're probably rewarding all three of them in different cases. Then we've reached the last three projects that I will describe in some more detail, in particular because they are focused on impacts. That's the Hypercerts Foundation. They are creating these Hypercerts, which is a standard that will hopefully provide what they call the data layer for this whole ecosystem. So it's so foundational that it can be used for basically anything. But they are they're very interested in making this ecosystem about impact and not about outputs or outcomes. So they're interested in getting the impact evaluators in their ecosystem to take all outcomes into account. Manifund is again something, a project that is focused on impact. I'll mention them later in more depth. And then, of course, there's impact markets or AI safety. Impact markets, our own project, and obviously we're focused on impacts. So here's a different taxonomy. In this taxonomy, and I will hide my video for this. In this taxonomy, you can see on the vertical axis the particular problem that these projects are tackling. So whether it's access, which I elucidated in the context of growth startups, whether it's risk, the typical use case for impact markets at the moment, or whether it's knowledge or overhead, local specialized knowledge, the use case that we are particularly focused on at the moment. And on the other axis, there is the mechanism by which these trades are happening. So on the very left, there are these kinds of mechanisms that are usually not traded at all. There's one sale happening when, in the end, a project is successful and gets rewarded. Like, for example, in most prize contests, there are exceptions, but in lots of prize contests, there's just a person who does something, and then in the end, they win a prize for it. There are exceptions to that, but I still put prizes in this category. Social impact bonds and development impact bonds also oftentimes fall in this category. At most, there is one investment happening. So if there's just up to a single trade of this sort, then I've also classed them in this category. I think that optimism is also simply rewarding people at this point, but this might change. OutcomesX, I've talked to them. They also don't have investors at the moment. At the moment I mean that this might change, but these little icons in the top right corner indicate whether it's currently possible to make money with this system or not, like in a profit-oriented fashion. And yeah, like OutcomesX is sort of thinking about that, but there's nothing really on the horizon. With the others, it is possible. So that brings us to equities. So this is where a lot of trade can happen. So these can be just freely traded around among investors. Lots and lots of trades can happen there. They can be traded fractionally. They can change hands a lot. I don't know whether this is the case with IXO. I think it is. They're doing this on the Cosmos blockchain. So I'm sort of imagining that it's the case, but don't want to spread any false information. Please just try to find out yourself. In the case of Manifund, that's possible. I will show some screenshots later. And Hypercerts are also traded on Ethereum, I think at least, or maybe some layer 2s at this point. Then that brings us over to the right side, into the space of commodities. So here we as like AI safety impact markets are of course aspiring to establish impact credits as commodities, so it is not the status quo. Yeah, our hope is to go for that format, and of course carbon credits have already achieved that. So with carbon credits, you can just freely trade them as commodities, just as you can trade, I don't know, oil or gold or something. Currently, you also cannot make any profits with our system, but then at some point, hopefully, when all of this is mature, we hope that we'll have the legal basis for that established to make that possible. And here is yet another taxonomy, just to give you an even better overview of this landscape. This is about what these technologies are used for at the moment. Most of them are a bit bunched up down there in the deployment space. Carbon credits, for whatever reason, are mostly used for deployment at the moment. I think development and social impact bonds are also mostly used for deployment. Then OutcomesX, from the outcomes that I could see, I've looked through a list of I think 90 outcomes. They all sound very much like deployment type of things, where there's no research or development necessary. You know exactly what you need to do, and you just need to do it. What I could gather, that's probably also true for IXO. Again, please ascertain that yourself. When it comes to R&D, then I have classed optimism as for-profit R&D. It's not quite correct since they are a foundation, but this could hypothetically be just as well used by a for-profit. We are currently very much clearly situated in the non-profit R&D sector with impact R&D, AI safety in particular. And that, of course, can change then once our system is mature. Once our system is mature, we want to be able to just open this up generally for any kind of positive impact in the world, be it profit-oriented or not. And I have included sort of an other category here as well as just sort of a catch-all, because obviously for-profit, non-profit R&D and deployment don't cover everything in the world that you could possibly realize and invest in. Hypercerts are also a very foundational technology, so they also cover everything. Prizes have been used for various different things, and Manifold is also in principle generic. They have, of course, focused on particular cause areas, but there's it's not so easy to classify them in this system. So this concludes this overview of the landscape, or this high-level overview at least. Again, if this were a talk, I would take some clarification questions here, but in this case, I'll just move on. Please ask your questions in the comments. So now I'd like to go a bit more in depth on Hypercerts. I talked earlier about standardization, and there was also already this analogy of the patent on impact. And this is exactly what Hypercerts provide. There is someone, that's David Dalrymple, who's thought about like what sort of schema would be useful. Sort of, you can think of a Hypercert basically as a form with a few fields, and these fields are standardized. And there is, for example, just a description of what you've done. There is the period during which you've done the thing. There is a field for who has contributed to that, so who should be the co-owners of this impact initially. And there are a bunch of advanced fields. And this is like the standard itself has a few nice properties that you can like recombine these certificates and so on. But mostly it provides a clear standard, and that is where its value lies as like foundational data layer for impact claims. So whenever someone wants to file some sort of impact claim, they can use the standard now, be it on a blockchain as it's being used currently mostly, or just in whatever random database. So long as they follow the standard, it establishes compatibility with it. And that is like the main benefit that they provide. And at the moment, outcomes are configurable, but the people of the Hypersearch team assure me that the impact valuers are held to take all impacts into account, all outcomes into account, regardless of what you specify here. And interestingly, rights are configurable. So far, I've usually, also with this analogy of like patents on impact, been referring to a right to like commercialization, a right to this retroactive funding to receive that, that you're like selling, licensing out, trading. And that is not necessarily the case with Hypercerts. You can also just have some other right, like for example, public display here, where whoever holds this impact certificate is allowed to display that publicly and show it off. So you can just configure this freely and attach other rights than the commercial ones to it. Hypercerts are being actively used. There are like several 10,000 Hypercerts in circulation, and some 20,000 unique addresses are using them, so probably also like thousands of people. They, as I mentioned, are meant to provide the basic data layer for impact claims, and then additionally on top of that, come like all these like attestations and valuations and so on that provide legitimacy to particular Hypercerts that deserve it. And above that, in this tree, are like all the different kinds of auction mechanisms, like for example the S process that I've mentioned before, that can be used to allocate funding. This funding can take different shapes and can come from different sources. So this is what this nice diagram that I've like lifted from a presentation by Holke of Hypercerts of the Hypercerts Foundation, what that explains. Then there's Manifund. Manifund has basically a Hypercert-like form, but it's much simpler. It just has a title, a subtitle, and a description. So if you want to make your manifold description compatible with Hypercerts, then you have to include all the other mandatory fields of Hypercerts in the project description. And they're including a few other fields that I think are not about the description of the impact claim, but are about like some organizational details. And of course, the cause areas at the bottom, I also think that those are not about limiting the outcomes, but are just tags that make it easier to find your impact claim in their database. They run this for a bunch of different cause areas. They've started with this ACX mini grants thing on forecasting. That's why there are a lot of projects in that. And then, of course, technical AI safety is a very popular field. So a lot of people in that space have also filed their impact claims here. And I think this works the way that people file their impact claim prospectively. So they want to do something, then they attract seed funding from the investors that are listed here, the shareholders that are listed here on the right. And then if they reach their funding goal, this money is paid out to them. And then they can realize their project. And basically, only when the project has succeeded, this project thing transitions into the state of an actual impact claim. And then outcome buyers can come in and reward these investors by purchasing fractions of this impact claim from them. OutcomesX. OutcomesX is like a really nice, very sophisticated system where, first of all, they have the impact genome, which is like a decade-old system that has had a lot of time to mature and to standardize these 90 plus or maybe 100 plus outcomes. They have that in the background for the standardization and the registration of impact claims. And then OutcomesX is basically the exchange or the retailer or the broker for these outcome claims and allows buyers to purchase them and thereby retroactively fund the project developers. They don't have investors yet at the moment. That is something that is potentially on the horizon, but not anytime soon. Yeah, the most important part, the most interesting part is the level of like sophistication of the standardization of the outcomes that they have achieved. They rate the evidence by like how extensive it is, by its rigor, its relevance, its validity, and then also give you the cost at which the outcome in question has been achieved and give you like a benchmark from among like the other projects that they have in their database so that you can compare whether this outcome has been achieved at a particularly particularly cost effectively or the opposite. You can compare it to the other charities and the cost that they had to invest to achieve it. There's also some demographic information and just a lot more data on the scorecard. So that is like a very sophisticated system that they have in place there. They have a really nice video on YouTube and also on their website. You can scan this QR code or go to bit.ly/OutcomesX to watch that. That gives a really good overview of what OutcomesX is doing. And finally, of course, there is our own project, AI Safety Impact Markets. Basically, our thinking was since all of these things that have to do with like basically equitization of impact claims is like legally really difficult, what we want to start with is something that is like really legally safe, that everyone can do everywhere in the world without having to worry about legal implications, where they don't have to be accredited investors to participate in it, where everything like the barrier to entry is like as low as we can get it. The basic intuition behind it is that capital markets reward investors for making very like forward-looking, prudent investments that then pay out, and they make profits of these, and these profits enable these investors to then reinvest with more capital, and so have an even greater influence on the market valuations. The better the investors, the greater their influence on the valuations, and so that drives the price discovery forward. This price discovery is what we are really focused on, and we want to transfer this to the nonprofit space. And there, what we are doing is that we want to make the same true of donors. So if a donor makes particularly good donations to projects that then are successful and pan out and generate a lot of positive impact, that then these donors should be rewarded for that and should have a greater weight in the funding allocation of further donations going forward. And we do that sort of through a quasi-organic re-grantor system where like the better the decisions of a donor have been, so the better the track record, the donation track record of this donor, the greater this donor's like influence on the recommendations that we are making on our platform. So basically, we are providing a crowdsourced charity evaluator. People who just want to donate and don't want to do a lot of research can just follow the recommendations that this platform generates. And people who actually think that they have some private knowledge and that will want to try to make the best donation decisions, they're registering their donations on the platform to build their track record. And the better their track record, the greater their influence on the recommendations that the platform makes. So basically, their incentive is to influence these recommendations on the platform in favor of the charities that they think are the most impactful ones, in order to leverage funding through the recommendations of the platform for the charities that they think are the most impactful ones. Hence the idea, the intuition that they are quasi-re-grantors for the other users of the platform. So that was about the first two phases, or the first two versions of our vision. And this is about the last one. You've seen this diagram before. This is where we want to get to in the end. This is the sort of thing that we want to establish in our phase 3. And to get there, we will have to fundraise for like all the legal costs that come with that and all the investigations of like in which country even to start this. So if you are like an impact investor or like any other kind of investor, there are also like lots of sources of potential profits in this ecosystem. So even if you're like a business angel or a VC, then this could be really interesting for you to invest into. We are a public benefit corporation, so you can invest into our company to get this started. And basically this diagram symbolizes the vision that we have for this ecosystem that we want to build. It's very much like carbon credits for any kind of impact. So this brings me to this final call to action. So if you're interested in just using our charity evaluator for AI safety, which we already have running live up on our website, impactmarkets.io, then please go ahead and use it, but please also go to bit.ly/donor-interests. That's this QR code here, and register that you are interested in using it, because the more interest we have registered, the greater the incentive for project scouts to actually help you with their hopefully wise recommendations for projects. At the moment, the recommendations are not super robust. We want to improve that, and for that, we need these registrations of interest. In this form, just a very quick 1-minute form, you'll just be asked to like fill in your name, email address, and your annual donation budget, and then we'll put the aggregate, like the sum of all of that, on the website. At the moment, we are like at $370,000, but we want to drive this up to like $1 million or more in order to create a strong incentive for project scouts to come in and try to move that money to the projects that they think are the most impactful ones in the AI safety space. Conversely, if you're a project scout and you find it interesting to move some of these $370,000 that we already have, or potentially more soon, then please come in, register your donations, bring like your favorite charities that you think are the most impactful ones onto the platform, register your donations to them, and signal boost them on the platform so that other donors can see them, other donors will know that they're awesome and donate to them. that is beneficial for you, that's beneficial for the charities that you're supporting. You're basically leveraging other people's donations with your recommendations. You'll basically become a re-granter for the other users of the platform. Please go ahead and do that. And then, if this were a live talk, then I would now also invite you to join me for the next talk in a few hours, I think in the same hall. Then thank you very much for listening, and feel free to come to EAGX Berlin. I don't know if there's still any tickets left, and listen to this talk live. But if that is not feasible for you, then there are also recordings of these other talks, or talks very similar to them, on our YouTube channel. Thank you so much for listening, and goodbye.